Hello, everyone, and welcome to this episode of Pod Save Chocolate. My name is Clay Gordon. I'm your host, and today we are going to be doing the May News and AMA Ask Me Anything About Chocolate or Cocoa episode of Pod Save Chocolate. Before I begin, I'd like to remind everybody that this episode of Pod Save Chocolate is sponsored by the members of the Chocolate Life, and this is the homepage of the Chocolate Life right now. If you are not currently a member, you can go and click on the join button. Right? There's always a free membership level of the Chocolate Life, and there has been since 2008 when I founded the Chocolate Life. But if you do have the resources to support the work that we're doing here, they begin at little as $5 a month. I understand that not everybody can make a financial commitment to still yet another site that is asking for a financial commitment, but you do have the resources. Please, this is how the bills get paid and the light stays on. And with that, what I want to do is go and let's talk about what we're going to talk about on this episode of Pod Save Chocolate, and that is the monthly news in AMA. And this is the post for today's episode. There is a post for every episode of Pod Save Chocolate. As a matter of fact, you can go click here on the archives button, and it is a list of all the previously aired episodes of Pod Save Chocolate. Of course, these are episodes 101 through 200. I'll add it later today. But then there is an episode you can go and click on the down arrow, and you look at the first 100 episodes, or all 150 some odd episodes of the Chocolate Life Live. So that's just a quick reminder about how things work. This is an overview of today's episode. It's not scripted. This is just a run of show, if you'd like. So I'm going to follow this outline. And if you've got a question or a comment that you'd like to make about anything I say about today's episode, what you can do is you can go into the live chat on YouTube or the comments on LinkedIn or Facebook, wherever you happen to be watching, and put them in and I will see them. I'll get the question up on the screen. Again, you might have a comment about something I'm saying, or just an ask me anything about chocolate or cocoa, and I will go ahead and do that. So just use the comments, that way. So let's start off. As I do with every News and AMA episode, let's go take a look at what the price of cocoa looks like right now. So this is a service that I subscribe to. I'm logged in. But it's still showing me an ad. And what we're looking at, today's cash price for cocoa on the New York Exchange is $4,700 a metric ton. And what we can do is we can go and take a look at the price history. Let's go take a look at the price history. And what we've seen is that the price of cocoa is up considerably. So it was down around $3,100 a metric ton, floating around $3,100, $3,200, down under $3,100, under $3,000 a ton. This is at the end of February. So within the last couple of months, we've seen the price go from under $3,000 a metric ton to nearly $5,000 a metric ton. So why is this important to you? If you are a chocolate fan or a chocolate maker, my representation is that you should spend some time every week, whether it's when you start your business on Monday morning, when you close the business down on Friday afternoon, getting some idea of where cocoa is, because your business as a chocolate maker or as a confectioner depends upon the price of cocoa. What you're going to pay for your chocolate is entirely, or what you're going to pay, what people are going to buy your chocolate for, if you're a maker, depends entirely on the cost of beans. And so understanding where the cost of cocoa is, where it's going, where it's been, in a site like this, you can go and, not particularly this page, but if we go back to the original view here, what you'll do is you'll see that there is a description. So it says that New York is down today. London cocoa is down. Cocoa prices are sliding today, giving back some of the recent rally as a stronger dollar sparked long liquidation in cocoa futures. So one of the reasons why we're seeing the price doing what it is that it's doing is that it's speculation, and it's currency speculation, among other things. So it's important to understand that. I mean, one of the challenges that small makers have is that you don't have enough money to start speculating in the commodities market, not in any significant kind of way. You can't go short or long on 100 metric tons of cocoa, right? Because even though that might be nice, to be able to take at some point a physical contract that will allow you to buy that cocoa, it's just, for most chocolate makers, they don't have the free cash resources to be able to invest that way. But understanding what it is that's driving the market is really important. One of the resources that I like in that respect is a site called Trading Economics, and one of the reasons why I like Trading Economics is the charting feature. So I can look at what's happened in the last week, the last month. So we get a really interesting kind of idea about, even though it looks like there's huge upward movement and there's still quite a bit of volatility within a narrow range, if we look at this within the last 6 months, we'll see that, that the prices that are being paid now, or the futures contracts that are being purchased now, are well below what they were in mid-December last year. So understanding trends where cocoa is going is a really, really good thing to do, in my opinion. Now, you also might want to take a look at some historical prices. So this is the prices from 1977. And it's important to understand that these 1977 prices are in constant dollar terms. Right, so these prices are not adjusted for inflation, and there's no way to figure out, you'd have to go to some other calculator and say that on July 13th, the high price was $5,104 per metric ton. So you'd have to go to some calculator and say, what does that $5,000 represent in 2026 dollars? And the answer is it's well over $20,000. So just for fun, but you can go and pick any year that you'd like. So let's look at 2023. We can look at 2024, right? And we can see that, here's what price is doing. So this is just a good way to familiarize yourself with where cocoa is going. Where it has been as well. And again, if you take a look at the Trading Economics chart, you'll see cocoa futures eased below $4,200 per ton, but stayed close to recent 3 months highs. Traders continue to closely monitor reports of rainfall, as well as growing concerns about the potential return of adverse weather patterns linked to El Nino in the coming months. So again, I mean, if you make your living and you're based upon cocoa beans in any form, then understanding the dynamics that are affecting the price of cocoa are an important aspect of what you're doing for your business. And so one of the things that I've started doing, and I will continue to do, is I've written a little bot, a little agent that I will run once a month in the days leading up to this episode, where I can get some ideas of some macro trends and some micro trends that you might want to watch. So if you were a chocolate maker, if you're a confectioner who's using a lot of chocolate, these are an educated guess. I mean, LLMs, right, need to be tuned and need to be educated. And that's something that I've done in this context through many, many conversations. The LLM knows a little bit about me, and I have a voice document. And so it understands what it is that I'm looking for and my background. I'm trying to do as much training of this LLM or this skill as I possibly can. But right, what you've got here is perhaps an explanation for what it is that's going on. And I do this from a, past 90 days to future 6, 12, and 6 and 12 months, I believe. I'll have to go back and look specifically about what they are. But what are some 5 macro trends we need to watch when we think about the cost of cocoa? What's going on in the Strait of Hormuz is one of the things. So the 2025-2026 harvest year surplus I mean, it turns out that the traders are expecting there to be a surplus. So the market is pricing in a surplus. Rabobank, which is based in the Netherlands, cut its 2025 surplus estimates to 250,000 metric tons, down from 328,000 3 months earlier. The drought and weak Shirel. And if you're not certain what a Shirel is, I put a little explanation. That's what the footnote is for. So a Shirel is the little pod that develops out of a pollinated flower. That Shirel may or may not grow to maturity. So it may produce a fruit which can be harvested, or it may not. The tree self-regulates. If there are too many Shirels and the tree decides it can't bring all of them to maturity, it will let some of them wither on the tree. So the drought data and weak Shirel formation suggest further downward revisions are coming. If the surplus continues to ratchet down, that will increase price pressure up. So EUDR compliance, assuming, and there's no way to guarantee, that the EUDR doesn't delay compliance again in late 2026, but we are expecting compliance of the EUDR for large companies by the end of December of this year, and by the end of June in 2027 for small and micro enterprises. So verified origin beans now command a notable price premium. Non-certified volumes are struggling to find willing international buyers. And so that's an important consideration, that we're creating a two-tier pricing system, another two-tier pricing system, where beans that are certified to be EUDR compliant, quote unquote, certified to be EUDR compliant, now have a premium compared with those that aren't verifiably EUDR compliant. And verify is probably a better word than certify. But this dichotomy, this bifurcation of the market is something that's going to complicate pricing in the short term and in the long term. Another thing that many people may not consider is that China has a zero tariff policy for African cocoa, right? As opposed to, other parts of the world have tariffs at different levels, but China said anything coming from Africa will have zero tariffs for all 350 African countries, which include all of the cocoa producing countries, lowering entry costs for West African commodities into the Chinese market. It's a short-term trend, it's an early trend, but may be directionally significant as it creates an alternative demand pathway for a West African origin bean that bypasses traditional European and US buyers. And what we may see, and I think we are seeing, is we're seeing a shift in small amounts away from West Africa to South American, Latin American countries, Ecuador, Peru, Brazil particularly, going into the EU. And so where are these volumes of beans going, from West Africa, if it's less expensive to send them to clients in Asia? They're going to go. Again, this change in sourcing strategies and distribution strategies is just going to further complicate hedging strategies going forward, which is just to say there's going to be more influence on the price of the cocoa through trading strategies than there already is, would be my interpretation of what it is that's going on. And we have another macro trend, which is demand recovery. So major chocolate makers are signaling a cautious stance towards holding prices rather than chasing volume recovery, right? JP Morgan holds a median price of 6,000 a metric ton, framing this as structural rather than cyclical. And so what JP Morgan is saying here, and this is a little bit what I was saying, months ago, is that the long-term price going forward is going to settle around a new high, where previously it was somewhere between $2,000 and $3,000 a metric ton. We're likely to see the structural cost of cocoa settle down into somewhere in the $5,000 to $6,000 a metric ton range. And this is what JP Morgan seems to be suggesting here, at least in the medium term. We'll see it. This is a long term. So he's framing it as structural, JP Morgan, not he, but they are framing it as structural because they believe it reflects something fundamental to the way the market is organized, the pressures on the market, on supply and demand, and on speculation, rather than, oh, this is, it'll be one way one year and another way the next year and back to the way it was the following year and back and forth, something cyclical, which is what they're doing. And you know, that may be the case. But the real question is how much of the $6,000 a metric ton makes their way back to the farm and the farmer. And if the answer is no appreciable amount, then we haven't learned anything. And this, I believe, is the single largest macro trend that we should take away from what has happened in the last couple of years, is that the major players in chocolate and cocoa haven't learned anything, right? They haven't learned that they're, roughly 70 years from roughly 50 years from the 1970s to the present day, there's been no systemic investment in cocoa farms and cocoa farming. And so it's hardly surprising that cocoa farming is fragile. And they're pushing it off into civil society. They're pushing it off to local cooperatives. They're pushing it off to NGOs. And they're not taking responsibility for it because taking responsibility for it might open them up to legal liability in many respects. And so they just want to externalize those risks, make sure that those risks don't show up on their balance sheet anywhere. And so while they might be structurally incentivized to improve the lives and livelihoods of farmers and to invest in farming more generally, directly invest in farming more generally, it turns out that from an EBITDA, so how much they're spending as opposed to what their return is, how they compare with other companies that do the same thing that they do. It makes their stock less attractive if their cost ratios are higher, and they don't want that to happen because their job is to return to investors, and if they're seen as not returning to investors, then people will sell their stock and go to someplace where their money will earn more money. But that is a short-sighted quarterly outlook. Rather than saying, oh, we want there to be cocoa 20 years from now, how do we make sure that there's cocoa that we can afford 20 years from now? And fixing prices or doing everything they can to keep the prices artificially low is a short-term fix. It doesn't actually address the long-term environmental and agricultural needs that to ensure that there is enough cocoa going around, or there is enough cocoa to produce chocolate. And this is where, again, short-sighted investment, what we're seeing is that these chocolate makers, instead of investing in cocoa, are investing in cocoa alternatives. So again, creating another bifurcation in the marketplace, quote unquote, real chocolate, quote unquote, alt chocolate. I want to find a word. Rather than calling it cocoa-free chocolate, we need to find another word to replace faux-chocolate, which doesn't roll off the tongue. But we need to find another word for cocoa-free chocolate that doesn't include the word chocolate in it. So if anybody, faux cocoa, that could be good. Faux cocoa might work. But if you have any ideas, put them in the comments. Let me know what you think. I mean, if you think it's a good idea, number one, that we come up with an alternative phrase. And I'm sitting here talking and not paying attention. We can make this bigger. All right. So what are some micro trends that we need to watch? So over the next 3 to 6 months, right? Mid-crop rainfall. Right, this is a short-term variable. Is there going to be enough rain? Is there going to be too much rain? How is that going to affect yields over the coming months? Right, we don't know. Right, and so a lot of the so is the industry concerned about where price is going? Right, are they being overly optimistic? Are they not being pessimistic enough? That's all being priced in terms of short sell and long sell contracts, but nobody knows for sure. And a not enough water and too much water over the next couple of months could completely change the scenario and get us back to cocoa that costs significantly more than it does now. Just that's the way these things work. Inventory levels. So cocoa inventories rose to a 19 and a half month high, so a year and a half of 2,540,000 bags. Rising certified stocks. So might be EUDR certified stocks are a structural bearish anchor, right? So they cap how prices can go in any given supply scare. So this is one of the reasons why the ICE inventory was created as a buffer, right? There's cocoa, which is an inventory. People can buy the cocoa from inventory and specify what it is that they're looking for. So it turns out that the inventory levels are a buffer, and they are going to affect how prices can move. Notice that this notion they will cap how high prices can go. Well, to what extent, and I don't know the answer to this question, to what extent did the ICE cocoa inventory keep the price at $12,500 a metric ton instead of letting it go higher? I don't know. All right. So again, fund positioning. We need to take a look at where the major speculators and the major buyers, so funds, so investment funds rather than buyers directly or traders directly, boosted their short positions, right, to a whole bunch of net short contracts, which is the most in more than 3 years. Heavily shorted markets are violently prone to short covering rallies on any bullish news. So, yeah. So if you've got a short, the price changes, you want to try to cover your positions as quickly as you possibly can if they go in the wrong directions. So a rain failure, a Nigerian export disruption, some escalation in cocoa going through the Strait of Hormuz. I don't know how much cocoa goes through the Strait of Hormuz, but a lot of oil does, right? Any of these could trigger a rapid 10 to 15% price spike driven by positioning, which is where are these funds putting their money? That's their positioning, rather than anything fundamental affecting the price of cocoa. So not the harvest or anything like that. Another thing that it's listed here as a micro trend, but it is something that's signaling perhaps a more fundamental long-term trend, is about cocoa swollen shoot virus, right? So CSSV has had an impact on 81% of Ghana's crop and spread across 11 of Cote d'Ivoire's 13 southwestern growing regions. So if CSSV becomes more prevalent and reduces the productivity of trees, then what we're going to do is we're going to see lower yields, and lower yields mean higher prices. Right. And finally, we're going to take a look at, we're going to follow whether or not Barry Callebaut divests its cocoa trading unit from the chocolate manufacturing business. They're one of the largest cocoa traders in the world for their account, for other accounts. And if they were to split the cocoa trading division into a separate company, there are a couple of questions. Number one was, would it be independent? How would it operate it? Or would it be purchased by someone? And then if it's going to be purchased by another company, who are the natural acquirers? Would it be OFI, so Olem Food Ingredients? Would it be Touton, or the investment firm that just purchased Touton, whose name or is in the process of purchasing Touton? I don't know. But this divestiture, if it happens, of Callebaut's trading activities into a separate company or being absorbed by another company, would change the balance of power in cocoa trading. So it remains to be seen what's going to go on. Before we get to the next post, questions, comments, go into the live chat in YouTube or the comments on LinkedIn and Facebook. Let me know if you've got that or any other question about chocolate or cocoa. And before we go into the chocolate scorecard, I'm going to be doing a full episode on the chocolate scorecard this coming Friday. So today's Tuesday. 3 days from now, I'm doing a deep dive into the chocolate scorecard. I want to do a quick take, but before I do, let's see, a little housekeeping announcement. Housekeeping announcement that I want to make. Whoops, I don't want to go there. Oh, I just changed the way arranged it. The housekeeping announcement that I want to make, excuse me as I go through things, is that there is a new uh, membership benefit for all premium members of the Chocolate Life. So this is any paid member of the Chocolate Life, starting from as little as $5 a month. So every week I will email this weekly chocolate news brief. So the history of this is that I wrote a bot. Which I use, among other things, to help me find stories to report on my monthly news and AMA. So I just keep track of things. And so what I decided that I would do is repackage that. So I take the Monday morning weekly brief. So this is what's happening in the previous week. And it generates a newsletter along with links to the sources for these things. And so what I am now doing is I'm taking that newsletter and I am putting it into a post on the Chocolate Life. And this post is available only to premium members. So if you were to go to, for example, here's Safari, where I'm not logged in, and I were to go look at the news brief, that's not what I wanted to click on. You click on the news brief, you'll see that the post is for premium members only. If you are a premium member and you are logged in, you will be able to see the newsletter and read everything that it has to say. And this is a new member benefit. It's free. It's at no additional cost to premium members. But if you think that something like this might be useful to you for as little as $5 a month, you can get your own copy of this. And there is an archive of them. And so if we scroll down to the bottom and you can go click on newsletters, you'll see that you'll get the weekly news brief. Now, there is another, this is April 28th to May 4th. There's another one, which is more recent. And you can which is not collected because it's pinned to the homepage, but a technical thing. But you can get all of the newsletters that are available. And you see that some newsletters aren't members only and some are available to everyone. So just a quick note about that. All right. So let's go back to today's episode with a couple of other, why did I put that in there twice? Okay. So I now know what I wanted to do is talk about this. So a newsletter that I get comes from the World Cocoa Foundation. It's called Cocoa Matters, and this is the April 26th link. One of the things that I am focusing on right now is I've been looking at the chocolate scorecard, and this is a link to the Meet the Team. And I'll go into this in depth on Friday's episode. But you'll look at the scorecard, and what you'll do is you'll find out that here are a bunch of people, and you have no idea who they are. So if you know that Carolyn Kiddo and Fuzz Kiddo are at Be Slavery Free, but who are Ruben Bergsma and Anna June? You have no idea, no links, no background, no history, no anything, right? And I was wondering, because I got this newsletter from them. Here's the newsletter because I subscribe to it. So I'm looking at a bunch of things. So for example, engaging the next generation in cocoa. That's pretty interesting. But let's go, what does it say here? And it turns out it's an article. And as the sector evolves, connecting young people with the real opportunities, all this is really mostly what this is reportage about the fact that the meeting happened, right? So this is the World Cocoa Foundation reporting about itself and the fact that the meeting happened. But the students offered an interesting perspective. Africa needs to move further downstream in agricultural value chains to retain more value from its resources. And this is something that has been discussed. This is not new news to anybody, right? The question becomes, one of the questions, so for example, if a big cocoa processor invests $100 million in a plant in, let's say, Cameroon, right? Who benefits from that? So the ownership, any profits from it, may not be from companies that are in Nigeria. It may not go to, or Cameroon. It may not go to Cameroonians in general. There may be some short-term employment related to construction. There may be some longer-term employment due to people who need to manage this new factory. But if the owners are in fact non-Cameroonian or majority owners, then the bulk of the profits are not going to stay in Cameroon unless they're taxed. And this is whether it's Cameroon or Nigeria, Cote d'Ivoire, Ghana, Togo, it doesn't matter. That's an issue. Who is going to benefit this? And so even though it makes sense, right, to retain more value from its resources, what it does require is really, really careful economic policy by the governments of the countries in question to understand who is going to be affected and how it's going to be affected. So this is nothing new. I've been talking about it for at least 8 to 10 years. Other people have been talking about it for much longer than that. Many are interested in applying technology to real world challenges, building businesses and contributing to economic development. All right, so here's an example. You have some sort of bottom-up awareness, right? The bottom-up demand that's trickling up to people who've got dollars, right, to perhaps implement them. So the real question is, how are the people going to, how is the World Cocoa Foundation going to respond to investing in these ideas and making them real? And this is just another, we met some people, they told us what they wanted, but there's nothing about how the World Cocoa Foundation is going to take these things and try to operationalize them, make them happen. And so that's a fundamental challenge around what the World Cocoa Foundation is. And, while it does a bunch of high-ranging, highly visible activities, the question is, what does that all mean? What does it mean on the ground? How do we understand what the economic impact of any of these things is? And so if you're anybody who's associated with the World Cocoa Foundation and you've got this article, what I would like to know is, what are you doing about this? Right? What are you doing about this? Right? So you've got some bottom up kind of stuff. World Cocoa Foundation, let's go. And so we're going to go and take a look at the about category. We're going to go take a look at the governance. So the governance structure, why am I doing this, right? Is you'll notice that even though Tricia Brannigan is here, there's no link to the Hershey Company, right? So, but we can learn that she is the Vice President and Chief Procurement Officer of the Hershey Company. Nestle, no connection, right? Cargill, there's no website. I mean, it is trivial to include links to go to these organizations. It's also 1, 2, 3, 4. I mean, you get here, this Christine McGrath is no longer a World Cocoa Foundation board officer. And what we'll do is we'll find. So, I mean, it is trivial to add links to places, and there aren't any. And there aren't any bios here as well, right? So why are these people here? It's hard for me to understand why they're here. But this is something that, let's go to about, and let's go about to members, all right? This list is frustratingly incomplete. So you'll find that, for example, this first list here for this Autoconfo company, you can't see it, but the URL is back to this page, right? So it's incomplete, right? I have actually done a fair amount of work to go and grab all the data off this page. So I've written scraper bots that go and grab all the information. And, one of the things that I've done is in a spreadsheet that I developed, I don't think that I have it easily available, but I may publish it at some point. That what I've done is I've said, you've got cocoa traders, cocoa processors, chocolate manufacturers, ingredients, chocolate manufacturers, retail, and then you got other. And what I've done is I've grabbed every single company that's on this list, and I've said, what kind of company are you? where do you fit in these kinds of categories? And then what I can do is I can go find out where they're located in the world, and I could say how much of these are European companies, how many of them are African companies. I'm guessing almost none of them are domiciled, their headquarters are domiciled in Africa. Not quite sure how many are domiciled in South America, but these are the kinds of research activities that I am interested in doing, just to understand, well, here we have Asia, Glico, they're Japanese, Dengo is Brazilian, so Fatser is Scandinavian. So these are sorts of things that I'm going to be doing right over the next little while to help understand. So I'm doing this not only with the World Cocoa Foundation, but with other organizations where there are publicly available lists. I ran across an ICCO maker list back in 2018, actually, and I'm doing a similar kind of thing. I think actually I'm right in the middle of doing it. So I have an online computer, which is AI enabled, called Zoe. And one of the things that I'm starting to do is I'm starting to write prompts, and these prompts are enabling me to go through all of the people on the ICCO maker list and then say, oh, here's the name of the company. What is the URL of the company? Because that's not included or if it is included, we don't know if the company is still in business, and then we can classify them. Are they a cocoa trader? Are they a cocoa processor? Are they an ingredients manufacturer? Are they a retailer? And then what I can do is I can say, for example, it'll tell me that there's a timeout or the site is not reachable, site under development placeholder. I mean, I can figure out what's going on with them. And then what I can do is I can look at the .de is Germany, all right. But .com doesn't tell me where they're located. But now what I can do is I can go and figure out where in the world these companies are located and start doing some analysis in terms of distribution of what's going on. So those are the kinds of things I'm doing to support all of these other things. But I do want to point out just one more thing, right, when we talk about this. Is that this talks about the ICO Global Sustainable Symposium in 2026. It's down here, right, in this image. But if we go all the way down to the bottom, it's a copyright 2024 notice. So somebody somewhere at the World Cocoa Foundation is not paying attention when they got a 2024 copyright notice on a newsletter that was delivered last week. Another thing I want to point out just real quickly is that there's this agroforestry under pressure. So I downloaded this. And again, I've got a bunch of different bots and things that I've created. And so one of the things that I did is these bots are trained on me and my background and my history and my understanding. And so I've got this prompt, which is going to summarize this research report, which is pretty huge. And then what I asked it to do, so here's the summary, it's fairly long, but then what I asked it to do is I asked it to go through and say, of the 11 different biomes that are researched in this particular study, which covers the Amazonian rainforest. So we've got up in the state of Pará as opposed to the Mata Atlântica in Bahia. What are the 3 different biomes that will respond that have the highest return on investment in the shortest period of time for the agroforestry systems that have been covered? So this talks about agroforestry, and what we want to do is we find out, if I had to make a choice on where to invest in agroforestry in cocoa in Brazil right now, where would I spend my money? What kind of system would I put together? And it says there's a cocoa plus coconut, which is very, very common in the Mata Atlântica, the Atlantic rainforest, which is in the state of Bahia, cocoa low complexity, and cocoa low complexity in Pará, as well as in Bahia. And then again, thinking about this, I said, what farm gate price is required in order to be able to achieve the return on investment analysis? And so that's really important. So it says the extremely short discounted payback periods are contributed to the integration of temporary species. So what you might do is when you've got a bunch of cacao seedlings in the ground, you might plant banana. This is very, very common around the world to plant banana around them. You may plant cassava around them well, but banana is a shade crop. So it's providing the cacao seedlings with shades as they mature to the point where they might be viable in more open sun or full sun environments. And what the farmer can do is sell the bananas, right, while they're waiting for the cacao to become productive. So it's really important to understand what we mean by agroforestry and what we're talking about in terms of the mix of crops and the cash crops which are involved in doing this. And so I'm gonna do some work on making this publication ready, and I'll make it available to on the Chocolate Life. If you follow the Chocolate Life, become a member, a free member, you'll find some notification of this. But there are a couple of things. It says, among other things, that cocoa has got to be at $37.69, and this is the farm gate price. So the farm gate price of $37.69 to get these rates of return in terms of ROI, right? And so if the farm gate price if prices drop to $2,400 a ton range, which is where they've been for, and this is the market price, not necessarily the farm gate price, you'll find that agroforestry systems may not be as attractive as we think. So again, just kind of some of the kind of high level research. And actually this is meta research, right? I'm taking 2 or 3 or 4 different studies and comparing what it is that they have to say to find out where they overlap and where they don't, and what other likelihoods there are in terms of what we're seeing. So I just wanted to share that with everyone. So I'm working on that. Finally, and not finally, but people may have noticed, among other things, may or may not have noticed that the Good Food Awards, the foundation, I don't know if the foundation has been dissolved. My sense is that it has. But what I do know is that the Specialty Food Association, so it is from the former Good Food Foundation. So the Good Food Foundation, who's the creator of the Good Food Awards, the Good Food Mercantile, and related, and the Merchant Guild, all these sorts of things around the Good Food Awards, is the Good Food Foundation is no more. And for the last couple of years, they've been working with the Specialty Food Association. The Specialty Food Association does the Summer Fancy Food Show in New York City. It does the Winter Food Fair, Fancy Fair, which was in San Diego this year, if I recall. And this happened on the 1st of April. So what that now means is the Good Food Awards are being run by the Specialty Food Association. So we've got a call for entries to the upcoming round. We'll see what that looks like, if there are any changes to anything in terms of the rules for entry. We'll see judging and other governance issue. But this is something that I'm going to be following up in the next little while. I am mentioning it because if you are thinking about entering the Good Food Awards, you might want to consider the connection between Good Food Awards and being a member of the Specialty Foods Association, or becoming a member of the Good Food Guild and the Merchant and Mercantile programs as they are associated with the Specialty Food Association. So, for example, if SFA decides to put together a Good Foods Pavilion, right, at the 2 specialty food shows, the one in June, July, and the one in January, then this may be a good way, if you are looking for extended distribution, right, into specialty food retail rather than direct or something like that. This could be a very good thing because Specialty Foods Association is huge compared with the Good Food Awards. I'm going to do a little more follow-up on this over the course of the next couple of months. I do get email about the call for entry of the Good Food Awards, and we'll see where things go. I have done a complete scrape of every single winner in the Good Food Awards in chocolate and confectionery since the beginning, right? And so because I've already done that, we'll see how things change for the better or for the worse. And again, just chocolate and confectionery. There was so much variation in the way the data were presented, that I'm not going to go and do this for all of the other categories that there are, right? But let's get to the last topic for today, again, which is the seventh edition of the Chocolate Scorecard. And I am just going to do a real quick take, because what I want to do is I want to set the stage for this Friday's episode, right? Which is going to be take a much deeper dive into the Chocolate Scorecard. So this is the home page of the Chocolate Scorecard. It's a scorecards page, I'm sorry. What we can do is interesting. Tony Chocolonely is not the number one, right? It has been number one for the last couple of years. Chocolat's Alba is number one. Ritter Sport, they've started to do some, at least here, they've shown that this company Simmons, which is a French company, spelled incorrectly. There's an accent over the E here. So we've got, there's a lot to understand what's going on. And I'll go into this in greater depth on Friday, but for example, let's take Chocolat's Alba. So what we do is let's go click to the detail page. And let's just find one of the challenges. The first one is, you may have trouble seeing this, but the URL just says 52, right? And so what does 52 mean, right? And so from my perspective, it means that there's no easy way to go, oh, here's scorecard.com scorecards. And if it said Alba, right, I would be able to infer the URL of a page. So if I wanted to scrape it, I could do it. I can't do that, right? So, and that's a real challenge. The other thing about this is, so leading the industry on policy and implementation. The implementation is iffy, and I'll get to that. It's on policy, right? And so we don't know on this page, right, what this means. So 86, obviously 86 out of 100. Green is what level? The average of all of these things is 85%, right? And we've got a little history here. Again, I'll go into this in more depth, but there is no history here, right? So for example, even though this is green, we don't know what they scored last year. This push here, because green is anywhere between 100 and 75%, we have no way of knowing if they scored higher last year than this year. All we know is they were green last year and green this year, but we don't know. So this overall score, we don't know. We know that it's an 86 this year, right? But we don't know what it was last year. And by the way, this page is rendered in JavaScript. There is no archive. There is no archive. You cannot get at any of the previous year's results unless you manually scraped. I mean, I can tell you that getting the data from here is next to impossible. So the third edition, why don't they show the first and second editions? There were different rubrics. So, and they were printed, and nobody decided that nobody decided it was worth the effort to go and take this data and just enter it into the database and make it work. So the other thing that we'll point out, and I'll do a little bit more work here, is that number one, the one constant in the Chocolate Scorecard is this organization called Be Slavery Free in Australia. And one of the things that I want to do and I want to show is that it's really difficult to compare results year after year. And this is maybe one of the reasons why they don't do it, right? In the sense that traceability, so if I am in the United States, right, or if I'm in any Western culture where I'm used to an alphabet working from left to right, reading from left to right, and then top to the bottom, right? One of the questions I would ask is there any meaning to the order of these. Are traceability and transparency, which are not the same thing, right? Are they more important than living income? Are these two more important than child and forced labor? And one of the reasons why I'm asking that is that I have 1, 2, 3, 4, 5, 6. So are each of these equally weighted? Are each of them worth 16% of the score? Right? I don't know the answer to that question. Even though there's a detailed methodology, it's not apparent from the methodology if these things are in equal weight. I do know is that from year to year to year, the order of these things have changed, and I'm not entirely sure why they've changed. And if that signals a difference in emphasis, just a difference in presentation, I don't know. Right? But it's one of the things that is never discussed in the methodology, right? So this is just that. So when you go look at the scorecard, right, there's a tendency to say, oh, these companies are the best of the best, right? But what's important to understand is that what this is a self-reported exercise. So the organizers of Be Slavery Free have contacted some companies, right? These companies have decided to respond or not respond, and this is all self-reporting. I don't believe there's any independent assessment of any of the numbers that have been presented. This is just, fill out a survey, and if we've got questions about your answers, we'll get back to you and do this. So it's self-selected, right? And it represents a particular framework. So the organizers of Be Slavery Free, they're an NGO, they're a nonprofit, and they have existed within this world of fighting slavery or trying to combat slavery. And so they have an institutional perspective which fits within the entire NGO narrative around anti-slavery and related things. And so this is there's no questioning of the framework. And more importantly, there's no understanding of the economic value of anything that they're doing. Well, number one is there an Australian nonprofit? They don't have to post anything about their finances. So we don't know how much money they earned. We don't know how much money the donors gave them. We don't know anything about that kind of stuff, right? We don't know what people are paid, right? It's hard to understand what the influences are. You can suss them out if you're very careful. Interestingly, they're less open and transparent about that reporting now than they were years ago. I can demonstrate that I will on Friday. But we need to be very careful. So we don't know, right? So for example, right? Hey, Tony's Chocolonely, right? How can you attribute any increase in sales, right, to your being listed number 1 or number 2, right, in the chocolate scorecard, right? So, right. And, Chocolat's Alba, you need to find out that, again, there were changes in how this information is reported, but we need to go to their page to find out, for example, they may list that they manufacture Alter Eco on this page. Alba Co-op, right? Oh, they don't manufacture. They don't list here that they are the manufacturing partner for Alter Eco. We get to Barry Callebaut. There's no relationship. There's no disclosing of the relationship between Barry Callebaut and Tony's Chocolonely in either of the two places where it could be mentioned. Right. And this is another aspect of it that we need to consider, and I'll go into a little bit more depth, is there's sort of a shaming aspect of this. So this is a company that decided not to participate in the survey. And so there is an aspect of the language around Pfizer, Kellanova, Kellogg's, Mondelez, Natra, Starbucks, Walter, that, well, you must have something to hide because you're not participating in the survey, right? That may or may not be true, but this naming and shaming is, I don't think it's productive. just a little, I would like to know, so there are, for example, 34 medium and large companies on this list, and 1, 2, 3, 4, 5, 6, 7, 8, 9. So 9 of 37, roughly 25% are non-reporting. But if we go over to retailers, right? Oh, this 34 may only be reporting, right? What we do is it says there are 10 retailers, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, roughly. But then you get, wow, you got all these companies who've decided that they didn't want to participate in the scorecard. Kind of interesting. And so, but there's no mention of, oh, this percent did and this percent didn't. And so we have to go and do this map. So when they go to insights and things like that, there's none of this information, right? So we have to do it independently, original bids. And then what we do is we find that all of the companies, right, in the small companies decided to participate in what goes on. And interesting enough, we see Oxfam Fair Trade, right? People think fair trade is yay, yay, yay. All fair trade equals all good, right? According to Oxfam's self-reported stats, they are in the bottom ranks of things. So we'll go take a look at what the numbers say and they don't say, and what we should infer and what we should infer on this coming episode of Pod Safe Chocolate on this Friday, right? And so here's the post for today's episode. We're at the end of the hour. Thanks everybody for being here with me today. And this episode of Pod Safe Chocolate, like every episode of Pod Safe Chocolate, is sponsored by the members of the Chocolate Life. If you're not a member, go over to the Chocolate Life today, click the join button. There's always a free tier. But if you do have the resources to support the work they do, for as little as $5 a month, you can support the work that I do here. And if you want to engage with me at higher annual members of levels of support, it does include coaching and consulting hours. So we can get on a call and we can discuss specific aspects of your business, whatever aspects of those business you might want to discuss. And with that, I am done for today's episode. I want to thank everybody for watching to the end, and to remind everybody that if you're working with chocolate and you're not having fun, you're doing it wrong. Until Friday, everybody, ciao.